There's just so much information flying around constantly. It's easy to feel a bit swamped, right? Trying to figure out what actually matters, especially when you need to get up to speed on something specific, like a company's performance, without getting lost in spreadsheets. That's what we do here. We wade through it all for you. Today, we're diving deep into Rallis India Ltd, specifically their first quarter results for the financial year 2026. We're not just going to read numbers, though. We want to understand the why behind them.
Exactly. And for this deep dive, we've gone through their official results, the press release they put out, and their investor presentation. All fresh as of July 14th, 2025. Our goal really is to pull out the key insights, the most important takeaways from all that material, and just lay it out clearly for you.
Okay, great. So let's start with the basics before we get the numbers. Who exactly is Rallis India Ltd? Give us the quick picture.
Sure. So Rallis India is a pretty major player in the Indian agri-inputs space, seeds, crop protection, that sort of thing. And importantly, they're a subsidiary of Tata Chemicals. That means they're part of the massive Tata Group.
Oh, right. Tata Group. That immediately gives you a sense of scale, doesn't it? We're talking, what, over 165 billion US dollars for the whole group?
Precisely. So Rallis operates with that kind of backing, and within that ecosystem, it's significant context.
Definitely. So what's their core focus? What do they actually do day to day, and who are they reaching?
Their whole identity is built around serving farmers, using science. They've got over 77 years of experience just understanding Indian agriculture, which is, incredibly diverse. And their reach is vast. Think about this, 7,000 dealers, over 100,000 retailers across India.
Wow.
Yeah, it allows them to connect with roughly 3 million farmers for their crop care stuff and maybe 4 million for seeds. Plus, they're not just domestic, they operate globally too, in over 70 countries.
Okay, so a really wide net. What kind of products are we talking about?
It's a pretty broad portfolio. High-quality agrochemicals, that's a big part, a strong seeds business, and also solutions for soil health, plant health. They're also known for their manufacturing. They've got plants in places like Akola, Lote, Ankleshwar, Dahej, and they do contract manufacturing for big global names too.
So reliable production.
Right. And they invest in innovation. They have the Rallis Innovation Chemistry Hub, RICH, down in Mangaluru.
Looking at their mission statement, it really frames all this. They talk about being the preferred partner for farmers, helping boost income, being an industry benchmark, and their values: safety, pioneering, integrity, customer centricity, excellence, speed. It gives us a good framework for looking at how they actually performed, right?
Absolutely. It sets the expectation for what they're trying to achieve beyond just the financial metrics.
So let's get into those metrics now. The first quarter, ending June 30th, 2025. What's the big news? What jumped out from the results?
Well, the headline really is strong growth, both top and bottom line. The press release leads with that. Total revenue from operations hit 157 crore.
957 crore. And compared to last year?
That's a big jump. It's up 22% compared to the 783 crore they did in Q1 of FY25.
Okay, 22% revenue growth is definitely strong. But did that flow through to the profit line? Sometimes revenue goes up, but costs go up too.
That's the really interesting part here. Their profit after tax, the PAT, actually doubled. It went from 48 crore in Q1 last year to 95 crore this quarter.
Doubled. Wow.
Yeah, so that means their PAT margin, the profit they keep from each rupee of revenue, improved significantly. It went from 6% last year to 10% this quarter.
A jump from 6% to 10% margin is substantial. What did that mean for shareholders, like in terms of earnings per share?
Well, as you'd expect with P8 doubling, the earnings per share, both basic and diluted EPS, also followed suit. It came in at 4.89 for the quarter.
Compared to PA?
Compared to 2.46 in the same quarter last year. So again, pretty much doubled.
Okay. And what about EBITDA? That gives us a sense of the core operational performance.
EBITDA also showed a really strong growth. Up 57%. It reached 150 crore compared to 96 crore in Q1 FY25. So healthy operational leverage there.
So strong numbers across the board. What did the management, Dr. Shukla, the CEO, point to as the main reasons for this performance? Was it just the market or?
You mentioned a couple of key things. Yes, market conditions helped. There was an early onset of the monsoon, which is generally good for the agri sector. And they also saw some recovery in global demand for certain products, so external factors played a part.
But not just external.
No, definitely not. He specifically highlighted internal factors too, things like improvements in their product mix, selling more profitable products, and also really focused efforts on cost optimization. Those were crucial for boosting that PE margin.
Right, that makes sense. Getting that jump from 6% to 10% PE margin usually requires some internal heavy lifting.
Yeah.
Okay, so that's the big picture. But these companies are monolithic, are they?
Let's break it down. How did the different business segments perform? Yeah, absolutely. And the results show pretty strong volume-driven growth across their main areas. If we look at crop care first, this includes things like insecticides, herbicides, fungicides. Revenue there was up 16%, going from 561 crore to 652 crore.
16%, solid. And profit.
Profit in crop care was even more impressive. PT surged 123%.
Whoa, 123%.
Yeah, from 18 crore up to 40 crore. And drilling down a bit within crop care, their B2C, the direct-to-farmer business, grew 13%. The B2B part grew 23%. And their soil and plant health business, the SPH segment, that saw really notable growth, 33%, which they mentioned aligns with their strategic focus on that area.
Okay, so strong performance in crop care, especially on the profit side and in that SPH area. What about the seeds business?
Seeds also had a very strong quarter. Revenue was up 38% from 222 crore to 305 crore.
38% growth in seeds. That's significant.
It is. And the PAT for seeds also saw a big increase, up 86%, from 30 crore to 55 crore. One specific highlight they called out was really good liquidation, basically sales, of their North cotton seed hybrids, especially one called Digaz. Seems like that product really hit the mark with farmers.
Interesting. So cotton seeds did well. Were there any areas that maybe didn't do as well? Any headwinds?
Yes, they did mention that. While cotton was strong, they faced some challenges in maize and paddy seeds, specifically due to supply constraints. So it wasn't all smooth sailing across the entire portfolio.
Right, okay. That context is useful. It really sounds like managing costs and operations efficiently was key to turning that revenue growth into such strong profit growth.
Absolutely. They specifically mentioned keeping fixed costs under control and finding cost efficiencies all along their value chain. And they also highlighted good working capital management, which helped them end the quarter with a healthy cash balance. It points to strong financial discipline overall.
So looking forward now, with this strong quarter behind them, what's the vibe from management? What's the outlook?
Dr. Shukla described the outlook for the next quarter as cautiously optimistic.
Cautiously optimistic. Okay, what are the main things they're keeping an eye on?
The key things to watch, according to them, are the liquidation or sell-through of products already placed in the market, both for crop care B2C and for seeds, making sure those actually get sold to the end user. They also expect a gradual recovery in the export market as the year progresses. So, not a sudden bounce back, but improving conditions internationally.
Makes sense. And thinking longer term, what about their strategic priorities? Where are they focusing their efforts for sustained growth?
Customer centricity is a big one. They keep emphasizing offering differentiated solutions, things tailored to different farmers' needs. They also plan to really ramp up efforts in building capabilities, specifically in manufacturing, digitalization, and using collaborations and alliances more effectively.
So strengthening the core and partnering strategically.
Exactly. It's about widening their reach, adding more to their portfolio, and building those key strategic alliances for the long haul.
Did they give any specifics on new products? You mentioned innovation earlier. Anything concrete launched this quarter?
Oh yeah, they were quite busy. In Q1, they launched 9 new crop protection products that covers herbicides, fungicides, and insecticides.
9 new ones in one quarter.
Yep. They gave examples like Alato and Penflor, those are herbicides for paddy, Dewweed, a non-selective herbicide, Dodrio, a fungicide for paddy, Master Gold for grapes, Fiplim insecticide for cotton. Quite a list.
So constantly refreshing the portfolio.
Definitely. And on the seed side, they launched 14 new products across cotton, bajra, and paddy. They also specifically mentioned investing more in R&D, scaling up processes, and upgrading manufacturing, including their pilot plants. So the innovation pipeline seems active.
It's clear that for a company like Rallis, operating in agriculture, it can't just be about the financials, though. What about their broader impact? Sustainability, community stuff?
Right. And they connect this directly to the Tata Group's big sustainability project called Alangana. Rallis has made some pretty specific commitments under that umbrella, things like a 30% cut in their absolute CO2 footprint by 2030.
30% reduction, that's ambitious.
It is. Also, achieving zero landfill waste by 2030, doubling their renewable energy use by 2025, so that's coming up soon, and ensuring 100% replenishment of fresh water they use. Plus, focusing on an environment-friendly product portfolio and developing climate-resilient traits in their products.
That's a very holistic approach to sustainability, touching energy, water, waste, emissions, and even product design. Do they get any recognition for these efforts recently?
They did, actually. In Q1, they picked up a few awards. Their Ankleshwar unit got a Resilient Award specifically for water conservation, ties right into that replenishment goal. They also won an award for Best Supply Chain and Logistics Company from Alden Global, and another for Best CSR Initiative for something called their Krishi Vikram program, awarded by the Indian Chamber of Commerce.
Krishi Vikram. What's that about? It sounds like their community work is pretty involved, too.
It really seems to be. They have several initiatives. Sea Safety is about water conservation. They worked in 7 villages, desilting canals and ponds. Jaldan focuses on education, helping students prepare for entrance exams. Unetgram is about skill development, digital literacy, AI training, even enabling women e-rickshaws for transport and income.
Wow, quite diverse.
Yeah, and another one, Tara, supports rural development more broadly. They scaled up a Maki Roti model, helping families earn income. They provide crop advice, link farmers to social security schemes. It really shows how they're trying to weave their business into the fabric of the communities they operate in, well beyond just selling products.
Okay, so we've covered a lot of ground here. The strong financials, the segment performance, the strategy, innovation, and this significant focus on sustainability and community. Bringing it all together, what's the main takeaway for you, for our listeners?
Well, I think what really stands out is seeing a company in this, traditional agri-input sector, not just delivering strong financial growth, which seems driven by a mix of good market conditions and smart internal management to operate, but also very actively embedding these ambitious sustainability targets and concrete community programs right into how they operate. It feels like more than just corporate social responsibility box ticking. It seems quite integrated.
That does seem to be the case. Which leads to a really interesting thought, doesn't it? In an industry like agriculture, which is so fundamentally tied to the environment, to weather, to the livelihoods of millions in rural areas, how do companies like Rallis India strike that ongoing balance? Balancing the need for robust financial returns for their shareholders with the undeniable long-term impact they have on the planet and on people. What parts of their strategy, their execution, will be most crucial to watch going forward? It's something to think about.